Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Dun, dun, dun. Let's just make sure the YouTube page is working. I sometimes have to load another. Forgot to load that page. Sorry, everybody. Let's just. Yep, looks like we're rocking and rolling. The YouTube page. Yay, good. All right. Welcome back to the Frivolity. Today is Thursday, which means it's the baby powder report. Here we are, 20th of February. RSP contribution deadline in about a week. So Canadians, if you are doing RSPs, better get on that. As I had said on Thursdays, we have the baby powder report. Julian checks in from Asia. And of course, he's having just a wonderful time being a gold bug through this market. So, also too, he strapped on a nice stock market short there at the top a couple days ago. So he's having lots of fun in the account. TRI, he has a fund that he's trading there. And he showed everybody how he's just knocking the cover off the ball in returns. So congratulations, Julian. Great trading. And also, too, I think really good usable information through the baby powder report. Very unique perspective that he has. And if anything, I really like that because there are no two traders that are going to look at the world exactly the same. Just like there's no two people in the world that are going to look at the world exactly the same. So seeing his unique approach using the Tom DeMark indicator and RSI and Keltner channels, 3 reasons for a trade. Tom DeMark for telling you like timing, Keltner channels telling you for location, and RSI indicator confirmation. Great stuff. So, and really you could make the argument that what we do in our education program is teach you the basics of all of these tools. And really what we want you to do is walk out of the education program with just an understanding of how do professionals go about building setups. Why do you really ought to have, or why should you have 3 reasons, and hopefully they're unrelated, to consider taking a trade? And what happens statistically in your performance if you have to insist on those 3 individual unique reasons all lining up for you to take a trade? Turns out that if you can find 3 unrelated reasons, odds are you can find 4, 5, and 6. And of course, the statistical probability of your trading goes way up if you can find that kind of technical scenario. So, thank you so much, Julian. Awesome stuff as always. I put together just a quick little chart deck here for you guys in these free videos. And the message on balance shouldn't really change a heck of a lot from day to day in that we just want to give you sort of an overview of what we're thinking about risk on, risk off. Are there any ideas that we're kicking around? Are there any profits that we're making? Did we get stopped out? And do we have to demonstrate what it looks like to be humble and lose money accordingly in the market? And of course, do we have any knock the cover off the ball wins? So, first off, always a good idea to keep an eye on the US dollar index. It's interesting today, especially considering the quote-unquote risk-off trade seems to be catching a bid. It feels to me like these major international currencies are all just sort of, it's almost like one by one by one, and think also too, race to the bottom kind of idea. The U.S. economy seems to be the only economy that's actually really working right now, and so everybody, of course, is incentivized to depreciate their local currency so they can sell their products into the U.S. market at cheaper prices, and they're more competitive. It's an interesting world that we live in because, at the same time, we have basically the euro going on sale and getting absolutely destroyed here. Today, and actually, ironically enough, a little bit of back and forth, and this is actually a really interesting conversation unto itself because what I've personally found is that when you have these massive price gaps left open, it creates sort of like a vortex. And it's really interesting to watch as assets come down into those vortices. It's funny how sort of price itself said that by the time we get down into this 108, area, we're going to start getting into some chaotic price action. And like I said just a moment ago, you can look at price gaps, especially on big assets like currencies. These price gaps, this is like a vacuum in space. It's like, whoa, there's no gravity or anything. And you can actually see as they're coming down into these chaos levels, more chaos. Look at the price action. Really, they're just tearing. And this is the worst part about these kind of markets is that really a lot of kids, that are running Forex, CFD kind of trading accounts, they're going to be trying to pick bottoms, and the market's just ripping their hearts out in this vacuum. So really the bottom line here, if you're planning a trip to Europe or something and you're in North America, I think that the euro is going on sale. But please understand, through all this, the trade is going to be extremely choppy. And if anything, as traders, we have to sort of let this settle down. And ironically enough, counter trend rallies back into resistance actually are representing shorting windows for me. But I do like the idea that if you are planning a trip to Europe and you're going to need euros, well, basically the euro is going on special right now. You can even see guys, value guys like Johnny Hoagland, they're coming in on the buy side here. Below value, right? At the gap, reload zones. You guys have heard all this a million times before. But it's just interesting to watch that, ironically enough, the euro is not what they're taking apart today. It is the Japanese yen, which is really interesting because this sets up a really funny situation where yen has been, in the market's eyes, perceived to be sort of the safe haven. If the U.S. economy is falling apart, now the U.S. economy appears to be pretty strong. So people are running out of euros, and really stay away from Christine Lagarde until she actually buckles down and acts like a banker. But it appears to me, and especially we had some really, really poor econs come out of Japan recently, but it looks to me like they're taking the yen down. Same sort of trade. You can see we're coming down below value here. And of course, look at this monstrous gap sitting down here wanting to be filled in. So, this is that sort of, race to the bottom. How ironic for a guy like Trump. He's going to put up all these trade barriers. He's going to put up all these tariffs, all these walls. And the irony of it all is at the end of the day, they devalue their currency. So all of a sudden now the currency is cheaper in the U.S. market, and all of those tariffs, all of that stuff, just basically been negated. So it's kind of ironic. Trump wants lower U.S. interest rates, but what that's going to do is it's going to cause the U.S. economy to go to absolutely bananas, which is going to cause the Fed to want to raise interest rates, which is going to drive the U.S. dollar higher, which is going to drive these currencies, and now especially in the light of coronavirus and all the China fallout here, he can't win. He can have the Fed raise rates, or lower rates, which causes the economy to explode, which drives the U.S. dollar up, which is going to get the Fed back in raising interest rates. Or, you could have really low. Anyway, you know how this scenario goes here. Either way, I think the U.S. dollar goes up here versus all these international currencies. And of course, I think I've told you guys that I am very bullish of the U.S. dollar, and I am very long of U.S. dollars. All right, that's a big conversation unto itself. I thought this was a great comment from yesterday, though. This was perfect, and I even replied to the guy, and I gave him a heart and all that, because I thought it was absolutely perfect. I drew these harmonics, AB equals CD, extension levels, and this gentleman goes, well, actually, those targets line up perfectly with my point and figure charts. Oh, crap, I just dated myself. I thought that was great. I got to give you a golf clap for that comment. That was perfect. But, yeah, no doubt about it, U.S. dollar still moving higher as those currencies are moving into those gaps. I don't really anticipate huge reversals. on either of those currencies until this US dollar index has hit the sort of 113 and this AB equals CD level. Now, the interesting thing about this is actually US dollar index, even after hitting that 113, you can see we're still not breaking out here. So, this is probably back and forth. Probably a lot of this kind of action over the next little while as we just sort of grind our way higher on the greenback. With that said, really interesting to watch risk on, risk off here. Gold is just charging higher here. I'm a little worried that the gold stocks might have gone a little overextended. You notice that Newmont here has actually hit that AB equals CD we've been talking about forever. Barrick did break out, but keep in mind, there's a lot of guys that might even actually take profits on that event. But, I think Barrick can probably still work higher. But I did notice the gold and silver stocks kind of stalling out here a little bit. Remember, guys, I'm not in love with this trade. If this son of a bitch comes back down, I'll walk away at scratch here. I do not need to be married to this trade. But as it stands right now, all this is just a big fat doji on the gold stocks. On the gold and silver, this is turning into a little bit of a shooting star, so we have to be cognizant of the fact that that might be it for that short-term rally. And if we do come back down to these entries on these gold stocks themselves, I'll just walk away from this trade. It's not that big of a deal to me. So just be aware of that. Yes, the market is moving higher. We talked hummed and hawed about shorting. I never did go in short, which, on balance, I'm thankful I didn't. But did strap on a little bit of a long here. Not married to the long. If I start seeing this thing crap out, I'm going to totally walk away. And this is what kind of has me a bit perplexed right now, is you can actually see the oil market is moving up smartly, right? Every morning I load the risk on, risk off matrix. I mean, look at this yen just, oh my goodness, just falling out of bed. Yet the bonds are grinding their way higher, and there's the gold grinding its way higher. I mean, totally mixed message here. But whoa, what's going on here? We got a double top breakdown in stocks, and like I said, I was very proud to hear that Julian had his room going short stocks. So makes sense. Now you've got an M top. It's even looking even tighter. I had said before, remember January had 2 waves down here to begin the month. January barometer kind of thinking. I wouldn't be surprised if we're soft right into sort of Ides of March kind of talking. Coronavirus, now I think the death toll's up to around 2,000 people. That's definitely got everybody's attention. And now you're hearing companies saying, well, revenue's going to start missing because of this. So let's see how this plays out. Interestingly enough, when we looked at the options information, though, what a surprise. Actually, the heaviest open interest on the puts is sitting down here at about 330, I think it was. Kevin, do you remember what number it was that Julian was saying? So the bottom line here is, even if the stock market does come down a chunk, actually the Wall Street guys, they don't really care. It's not that big of a deal to them. I don't think they're going to hit a massive home run on this options expiry, but as long as they keep the market above sort of the 330 level, they do very well for themselves. So I think on balance, stocks look very heavy. Gold and bonds, my poor old bond short idea, totally crapped out. And I'm now starting to hear people talking about interest rates are breaking in earnest. And I think I had shown you this chart here recently. We do have this M working here. So that does mean that sort of like these kind of chaos levels are starting to come into play. We haven't broken through these lows, and of course we still have this key low over here. But I'll tell you, I was thinking interest rates up, and that idea has now basically been negated. And I think on balance, I think the market's basically telling me, sorry, Brian, you were wrong. And it does happen in this game, I'll tell you that much, by crackers. Yeah, you can even see the gold futures, looking a little railroad tracky up here. All right, so point of the matter here, stocks broke. Ironically enough, I don't really have too much of a negative view of this, other than, January barometer. I do like the market coming back down. You can see where key support is here. This tail, wicks and tails like to be eaten. You got this hard low here. That's at 322 on the S&P, so we could very easily be playing in a very wide playground here. But what's got me sort of perplexed a little bit is the oil, right? Because the oil here, it did W. It broke out through this very long-standing uptrend, or excuse, yeah, uptrend line. It recaptured it and is working higher. Problem that I had is I couldn't really go and buy this. I think I've told you guys recently, because I like to have a W on the other side of this trend line. It's not coming in for me. It's a little bit of a piss off. Of course, the little oil stocks looking really interesting. Some of the oil names we like to follow. I noticed AR here has put in a little double bottom. So I'm going to be watching how this guy acts over the next few days. This is a new clothesline low, so I'm not in too big of a hurry. Same sort of thing, downtrend lines. I'd actually like to see a W right here, so still watching him. Like little Tusk we picked up here recently. Oops, I don't want to see that. Go away. I'm going to blow up my computer here. Let's go like that. And then let's go like that. You can see cute little W's trying to come in. Nice move up through on Tusk here. Through a $1.54. And I think we're off to the races. For the time being, still just sitting in this range. I like energy. I'm just not ready to say, yep, this is the bottom. I got a funny feeling this is like a 38.2 test. Then we have to come back down, and then we'll find out whether this thing's for real or not. And, I mean, if the gold just keeps charging higher and goes parabolic, I mean, maybe the oil's got to take a bit of a pause. But the thing that's got me a little perplexed right now is we've got actually both the gold and the oil sort of putting in spinning tops here. But they're both up on the day, which usually isn't the case, but we'll see how it goes. I think on balance, you guys know what I'm doing here. I thought it was interesting. Yesterday I told you how I can lose money like a pro, and ironically enough, actually, we did a nice winning trade here on the same time, but I didn't tell you about that. I just wanted to point out my losers. So here's a really cool little ZVO that we bought. Great Adam and Eve kind of setup here. And of course, if you look at this chart over 52-week range, it just looks like an absolute train wreck. So on this event down in here, filling in the gap, we went and bought some call options, and kapow! I think we got off like about 75. I think it was about 3/4 of the position at more than a double. So got a free position and even paid ourselves a little bit. So feeling pretty good about that. And hopefully everybody can see the W's. This isn't rocket science. Pretty straightforward. But the cool part about this was we didn't actually buy the W breakout here. Because we hunt cheap options, actually we had stink bids working against here. And we actually needed this push against these lows to actually get filled on the options. So it's a really good application of TRI SOF principle and waiting. All right, we got our fill right against the lows, and woohoo! So a really good example of a nice win there. I wanted to show you also too, give a big shout out to our level 3 TA, and he's also my partner in the ZMB trading club. He found this little stock about a week or so ago, and he came into the club and was like, yeah, we got to buy this thing, nice W, 205. He had his bid working at 205. I don't know why I didn't have a bid here, but I didn't anyway. And kapow! He got a really nice treat here this morning. So way to go, Zach. Wanted to give you a big shout out. Excellent application of that sort of Wyckoff check principle. Climbing the wall of worry, higher highs and higher lows defines a bull. And let the W come in, work your stink bids at structure levels, get these sick-ass fills, and then woohoo! So nice trade, Zach. I wanted to give you a big shout out there. So this ZVO was an example of buying against the low end of range, Adam and Eve kind of bottom, buying call options, getting a pop in the stock and getting paid. Too bad there was no options on this New Age beverage. I would have totally been all over that option, but oh well. So here is an example of one that I've been watching for a while. It is a pot stock. You can see we have some key lows here. You can also see they put in just the most beautiful outside upside engulfing bar. It wasn't quite a key reversal, but really good looking engulfing bar, and they announced that they did a big financing. They raised a bunch of money at these level. So the market works its way up. Of course, the euphoria, end of year, pot stocks all going crazy. But Brian and I looked at the options here, and I was like, holy crap, they're expensive. So I was just like, okay, well, just be patient, wait for reload zones. And sure enough, the option prices came down, and I picked up some calls here this morning on this little doji reversal. I have no idea whether this is the bottom. What is interesting about this chart is if you go to clotheslines, you can actually see it's actually got a W working, and it's actually trying to put in another W, which I thought was really interesting. But nonetheless, really good example of sort of Adam and Eve type bottom. If we do go up through this high here, and that's does it even say? There it is, 453. Then I think she's off to the races. But I went and picked up some, and this I got 2021 calls. So I mean, I've got a world of time. I bought the $6 call. So basically the old high. And when I zoom out, does it make sense why a guy like me would be doing this? Sometimes with these calls, sometimes they just do nothing for a hell of a long time. If we just do a 1 year 50% rule, I'm looking at 740. And actually, this isn't the $6 call. I beg your pardon. Excuse me. Shut your mouth. This is the $5 call that I bought because this is a U.S. stock. So I paid, I think I paid 60 cents, 65 cents. So if the market does go to my profit objective, right, which is just a 50% retracement, filling in gaps, really, look at this monstrous gap way up top here. But if the market just goes to the 50% rule over the next year to that level, is that even possible? I make, this option will be worth $5 minus 741 is $2.41. So I bought them at 60 cents, 240, that's 4x. And I got a year to let this happen. Is there any chance that through May, June, July, summer frivolity months that we get a move back up into this area? And heaven forbid this thing actually get its act together and we actually start moving higher in earnest, then I'm laughing. So hopefully you can see what I wanted to do is I wanted to show you a before the move, a during the move, well actually even during the move, both of the V's, and this one in particular case because it was an option, we've already actually sold half on a double, and now we have a free, in fact we sold 3/4 on a double, now we have a free trade. So this is like before. This is during, because way to go, Zach, you just strapped that on, and this is after. I thought that was kind of cool how I did that. Heading on over to the corn, looking at the corn charts in particular, it's just kind of funny that we say that. There's blockchain to it, which I was all super jazzed about, but of course, not at these levels down here. Putting an outside downside reversal. Boo, hiss, hiss, boo. iMining put in an outside downside reversal. Netcoin's kind of going sideways. IBIT, which we banged off a double, and so we're just sort of sitting there on free stock right now. Not really doing a hell of a lot in the junior land. Intermediate land, I do like SRAX. This isn't exactly a Bitcoin proxy, but I like their crypto proxy story. And a breakout through that high there at 273 actually is a buy signal for me. So here, that's this high here at 280 today. Actually, it looks to me like that's bottoming out here. So I'm looking for higher there. But you can see all these other blockchain stocks, nothing really to get too excited about right now. And if anything, like here's a good example. Pullbacks, I think, are buying opportunities. Actually, on all of these, I think all pullbacks are buying opportunities. But the reason why I mention that is I don't see any great hurry in crypto. What I see is, and of course I've been talking to you guys about this at length for the past little while. We came into a pretty important level. Those people that did take the trade off the bottom, they got their 2-to-1s, sell half on a double. If you're trailing stops, So be it. Maybe you have your stop at scratch, whatever, but you should not get hurt on that trade. And then, we actually had a very well telegraphed lower time frame setup that we walked through the daily brief at the end of today's daily brief that got me short off of this inside bar failure on the daily chart here. Full disclosure here, I'm not really in a hurry. I don't really need to make money on the short side here. I kind of wanted to do this kind of as a demonstration. I did feel as though there was a pivot in the market there. And, how would you do that trade? I did it over on the casino. If that's advisable, I don't know. And you can see the casino. They're having a lot of fun here this morning screwing around with the kids. But as present right now, I'm not really in a big hurry to do anything. And, I applied trading rules that we use on the site to manage positions, the bot trading system. And right now it has me move my stop to scratch. So if this thing works its way back up to my entry, I'll just walk away. And if anything, that'll be fine by me because it means crypto's okay and we're back in a bull, blah, blah, blah. But for the time being, right now, I am short and there's really nothing for me to do. Just leave it alone. Just let it do its thing. And of course, don't let a winning trade turn into a losing trade. So if we do start getting back up into my entry level, I'll just walk away. Big deal. Point of the matter here is I've got my hedge on. Just let it do its thing. And really, actually, I'd like to see this trade get busted out. Because then that means, hey, crypto's back to a bull. Away we go. But for the time being, I think the bulls better just cool their jets. And especially if we look at the internals here, oh boy, this looks pretty darn heavy. I could very easily see counter trend rallies here, don't get me wrong. But we've got now M's in OBV, we've got M's in MACD, we've got M's and RSI divergences in RSI. So are we really in a big hurry to be buying here? No. And if anything, at best, this key low is support, this key high is resistance, and we're stuck in a trading range here for the next little while. We'll see how it goes. Really, no opinion whatsoever. I wouldn't even be surprised, actually, if there is a revisit of these candle body highs as sort of like a level that the pros can actually get more shorts on. So we'll see what happens. I could very easily see a revisit back up top here. Also, too, when I look at the Bitcoin chart, remember these moving averages, weekly charts. This is a really interesting apex here because technically the moving averages are still bearish. Nothing has really changed here too much. And notice 1, 2, 3. Does this create a empire top here? So if we finish this week, beep, right here, and then next week we actually tick through these lows, that's a sell signal. But it's not here. So you have to wait for it. And notice the moving averages are still technically bearish, which means that if that sell signal does come in, I think we probably melt down pretty hard. My hunch is, first stop back into reload zones, but the trend is still down. If anything, what you'd like if you're a bull is notice these moving averages should be pretty powerful support. Let's maybe get a pullback down into these moving averages, settle down here a little bit, and then start working our way back up. Way too late to be a buyer. And Julian just said the same thing with gold. Way too late to be a buyer. The lower time frame traders taking short shots against the highs, which I think is very natural. It's probably not the best thing for sort of new people to trading. New people to trading should have been buying this bottom and selling, spoon feeding, taking some profits, stop to scratch, still long. And if anything, investors, you're waiting for that pullback against these lows. Candle bodies like to be, test traded to wicks and tails like to be eaten. This would be sort of my buying window. Homer's getting all excited on my cell phone here. So, long and short of it here, like I said, I got a little bit of a short going here. Just nothing more. It's just, part demonstration, part hedge. I'd actually like to see a nice dump in here, as I would like to actually take a shot on the long side, somewhere between about 7,300 and 8,000. That would be my ideal place to go hunting long. So, last but not least, and I'd sort of said this the other day, kind of tongue in cheek, but it turns out actually it worked out well. I had put out a tweet saying, there are names that I do like in this space, and, I'm just slowly accumulating away for the next crypto cycle. You can see this is just a smattering of some of the names that I've been acquiring over the past year. A lot of them are pretty much at where sort of I bought them. A couple of these actually I've gone and actually picked up a bit more to bring my average down. But on balance, most of them are just sort of bumping along where I bought them, or they've got a nice little bid. Did mention today, just because Bitcoin's going down, that doesn't mean your coin has to go down. And you might even have a situation where your coin actually has a pretty darn good market. So I was putting out tweets earlier today like there's always a bull somewhere. And you can see Algorand's having a pretty darn good day. We get up into this level, Brian, I'll be spoon feeding the market. And there are names that are working their way right back down, and you can join me if you want. You don't have to. I won't be offended one way or the other. There was one coin in particular that I was saying, you know what? Do yourself a favor if you can and see if you can try and pick some up against a test of the lows. Don't chase. And kind of like what we're talking about with the poop coin index, don't chase, but we're coming down back into buying windows. And this VIA, where if we just draw a simple reload zone just purely off of this range, I said, you know what, I'll go throw a stink bid in to pick up a little bit more at 786. You've probably seen Brian talk about that level before. And so I got filled. And I sort of tongue-in-cheek put out a message on Twitter sort of saying, I want the big coins to shit the bed. I want everybody to dump, and I want them to panic dump these kind of names against the bottom end of the range so I can pick up some cheap coins. Well, careful what you wish for. You might just get it good and hard. I'm filled. So, just want to show you what I'm doing in the market. These are sort of what I like to call little old lady nanny nibbles kind of ideas. Don't put a hell of a lot of money into them. I think I put like 0.015 BTC into this trade. Not a hell of a lot. I might even just go and do some more nibbling if I see that these lows hold in another test of lows down the road. But for the time being, I'm an open book. I just want to show you what I'm doing in the market. So actually I was on the buy side here today a little bit. So go figure. And that's sort of your summary today. I hope there was something in all of this that gave you a little bit of help. Slow and steady wins the race. I mean, as you can see, I trade a lot of assets. I've got a lot on the books. I had specifically actually spent November, December, January, accumulating. Actually, here's a stock I didn't even talk to you about. Maybe I'll save it for tomorrow, but I just went and bought this double bottom right here. So I wanted to accumulate, try and accumulate as many positions against lows, and hopefully, W's come in and I'm vindicated, and the trade looks good, and I'm on the right side of the trend. I do get stopped out on names that just don't hold those lows. But I'm feeling like I've got a pretty good basket, right? I've got a bunch of big stocks and big stock proxies. Got a bunch of medium cap names, sort of mid-tier. And I've got a bunch of penny stocks, little pieces of crap. So I got a pretty good spread here for the market. I'm loaded up. Buy when it snows, and guess what I'll be doing when that snow goes. All right, everybody, have yourselves a great day. All the best, and the only thing left for good old Brian to say at this point is bye for now.